Hello, hello, hello. Welcome now, Stock Trades. So, this is gonna, late night video here. Before I go to bed, I wanted to go ahead and kind of bring this up. I got a lot of questions about this. I have responded to them, but just might as well make a dedicated video about it. So, is Clover Health going to do a reverse stock split? Now, personally, I want to say I'm kind of split with this. I would say 75 percent. I would say yes. It does seem like they are going to do a reverse stock split, and the other 25% is no. So just to kind of work with the 25%, potentially tomorrow, we're getting to a point where the FOMC is going to declare whether we're going to go up a 50 basis points or 75 basis points rate hike. The market's split, honestly, 75% thinks it's 50 and maybe 25% thinks it's a 75. Regardless of the matter, is a CPI report came back today and it declared that, hey, it's most likely it's, coming down. So, why am I talking about economics and like not reverse stock splits? Well, the thing is, the stock market right now is really uh, really like paired to the macroeconomic environment because of this inflation that we're having. So, in terms of like a lot of folks, in terms of like reverse stock splits, there's a couple things that Clover can do, right? Clover can go ahead and basically say, we're not going to do anything and we're just going to leave it up to chance. And if they do get delisted, they just have to reapply for listing again. The problem is this hurts their ability to get funding and also less funding available because if you're on the NASDAQ, it's easier for you to essentially, just buy and trade the stock. It's hard to do over the counter, right? OTCs. So most likely they are going because of this. They are going to oblige, and historically, I would say they would do a 1 to 10 reverse stock split, which essentially means that they essentially conglomerate everyone's shares and divide everything by 10. So if you have like 100,000 shares, you just essentially take 100,000 or let's make it easy number 1,000 shares, and you would essentially go ahead and divide by 10 and it'll be 100 shares, right? So, and we're going to go ahead and do an intrinsic value calculation to essentially show you what would be the new price targets if we do a reverse stock split. Okay, so a lot of folks are saying, you know what, this is bad, it's not good for a company to do this. Well, here's the thing. Having a negative burn a net income is also bad, and having a negative free cash flow is also bad. And also being part of a SPAC with all the SPAC frenzies we had is also bad as well. So there's a lot of things, but a lot of companies have done reverse stock splits before. The ones that are successful that I can think of is like Citibank when the global financial crisis, and I believe another one good company that was went down during the dot-com bubble crash. Now, obviously, these are big. We're comparing events that are big in time in terms of crashes, but we are living through that right now. We are seeing inflation that we've never seen before, and usually stocks don't drop. A lot of stocks don't drop 60 to 90%. I mean, heck, just look at Adobe, PayPal, and Facebook. Meta, Meta is something special, but overall you can see that the market has definitely been beaten down. So in this regards, I do want to make a comment. This is going to be in another video, but today Andrew Toy released a couple things regarding Clover. I do want to make a separate video about this, but one thing that I didn't like is that he said we're going to focus on EBITDA, and again he said that's going to be our positive inflection point. Now, personally, I rather focus on free cash flow because there's a couple of things and assumptions that you do when you calculate EBITDA, and as as a fundamental investor, Warren Buffett doesn't really like EBITDA calculations, and we'll go ahead and talk about why. But overall, right now, I put this picture here to you just basically to reference things. Unfortunately, a lot of retail investors are short-term thinking. Just to kind of take home the point, if you go down on to the Reddit CLOV page here really quickly and just talk about hoopsies, go here and one of the comments, I have no idea, I believe here, just reiterating this because I think it's always fun to look at this. So there's a lot of folks. This is not fun. Sad, honestly. A lot of folks sold out of Clover, and if you can back calculate how many days they held, or just kind of calculate the percent. A lot of folks that have purchased in the $18 range, and the upper digits range, they're starting to sell now. And this is a lot of these folks that are selling don't really understand what's happening with the business. And I posted this, right, and I said, be greedy when others are fearful, right? And I'm not trying to pick on this individual. I'm just trying to essentially teach, right? I'm trying to basically teach about the stock market, right? So see, he said sometimes you gotta know when to fold them. And I said, hey, what's changed in the fundamentals of the business? And he said, well, it's been unprofitable longer than expected, and Chamath backed out, share dilution, and all these things. Pick your favorite. So I broke down everything he stated. I said, number one, when did you expect the company to be profitable, right? Because obviously, like my expectations was 2025, 2026, and I've always stated this, 2025, 2026. That's when these calculations will come into fruition. It takes a lot of years to get into the profitability. He said that Chamath backed out. I'm like, no, he didn't really back out. If you click on, and I even gave him the link, he probably never clicked it, but it is what it is. This shows all of Chamath's sales, and it says here, the sales disclosed herein were made primarily to allow recognition of tax loss harvesting. Okay, tax loss. I can find a way to, right? Tax loss. And he still owns shares, right? So then I went ahead and he talked about share dilution, and I told him that management predicted that it's going to be harder to raise capital in this environment, which is true. And I gave him even the link to this. I mean, I made it. Sorry, not this one. Where is it? Prioritizing profitability is this one here, offering. And I gave him this one. And if you go to recession here, they specifically stated, while timing the market is something many consistently do well, it is not something many consistently do well. We believe that waiting until next year to raise capital was too risky, given the possibility of a combination of potential rising interest rates, which we've had, potential recessions, and essentially a liquidity crunch, right? And this was sent on December 17, 2021, literally almost a year ago. Okay. So I tried to explain him, the picture here, and I literally gave it to him, everything. And his response was, oh, not this guy. This guy's on a whole different level here. He said, if you see nothing negative, including Chamath selling out, which obviously he didn't, he never answered. And luckily other Clover folks were saying, interesting. You see all the negatives, yet fail to respond. Anything else? So the goal of what I'm trying to say here is just be careful what you read. And like, for example, one individual said, hey, Al, do you think a company should do more to communicate to shareholders about the share price? Well, they can't really talk too much about the share price because, there's like SEC rules. But today they went ahead and they communicated to shareholders. So overall, I just think like retail investors, they get stuck in the weeds and they get stuck in these little drops and cycles. But overall, you have to understand the data that you have before you, the tailwind that you have before you. There's been so many crashes, World War I, World War II, so many different types of just crisis after crisis. And all you have to do is just kind of basically just focus in on what they're trying to do, which is achieve profitability. And sometimes just folks just don't, for some reason, they just forget about that, and they just get stuck up on it. And unfortunately, there's just a lot of misinformation on this Reddit page. No offense to the mods or anything. It's just, it's easier for me to create a platform of highly intelligent investors in our platform in our stock trades, but it's so hard when you have it open where anyone can just literally click join and have, all these members. You get all these personalities. I mean, just recently they closed down their Discord because apparently it went to hell, right? So the thing is, a lot of investors, they just unfortunately they just fail at especially retail investors, they fail to not look out into the future, right? They believe, unfortunately, that if other people sell and if the price drops, obviously it's a garbage stock. And unfortunately, what ends up happening is the best thing that I can do is just, read this quote to you that I posted on the community section on our YouTube page. Okay. And this is such a very valuable quote, and I can't summarize it better than this. It says here, the investor who focuses on value will recognize opportunities and start investing. They are followed by a few other brave ones, then by the large crowds who watched the success of the earlier investors and now consider it safe to invest. The price continues to climb, and more capital floods essentially in to chase these returns. As the price goes up, and you will see this played out in 3 years, 3 to 4 years from now. You're going to see this play out. As the price goes up, the potential returns start diminishing, because the more the price goes up, the more it gets closer to its intrinsic value and the more it becomes riskier. So let's read this. As the price goes up, the potential returns diminish. Risk becomes undervalued, but momentum will continue until the crowds discover that their investments suffer unexpected losses. Then the downward cycle begins. The cycle repeats over and over again. And unfortunately, a lot of folks that entered the market in 2020 haven't experienced such cycles. They don't know these things, right? You know, so these are really important things that, we would like to stress on. And, I've heard a lot of folks saying, about, you're being labeled as a pumper or whatever, and all these different types of things. And honestly, my response is, regardless of whatever society wants to put a label on, at the end of the day, I don't get stuck in what society says, because I have data of what society has done. And retail investors, let's put them as society, they always sell at the bottom and they always buy at the top. In the end, I focus on fundamentals. All right. I focus on the business. All right. I let society deal with the feelings. Right. So, in regards to the reverse stock split, let's go ahead and pull up our intrinsic value calculation here. Let's assume that they're going to do a stock split, 10 to, essentially 1 to 10, right? So that means, every 10 shares will become one. So there's 477 million, and we're going to do a 10. So which means all you got to do is just take this number and divide it with this number, and you'll get 47.7 million shares. So let's go ahead and just kind of quickly do this. So that means, and I'll explain what this means. That means like a dollar Clover Health stock will now be worth $10. So that's going to confuse a lot of folks. A lot of folks don't understand the difference. Let me just give you kind of an example here. Okay. If you look up AutoZone, okay. If you look up AutoZone stock, okay, is this an expensive stock? If I were to ask you right now, if we look up AutoZone, actually, and let's look up something we all know. Bank of America stock, okay? Which is a cheaper stock? Bank of America stock or AutoZone stock? Which is cheaper? If you said that Bank of America stock is cheaper, you're wrong. You know why you're wrong? Because how do you estimate what the company is worth? You got to look at the market cap. The market cap for AutoZone is 44 billion. The market cap for Bank of America is 267 billion. But a lot of retail investors would say, actually AutoZone is more expensive. I can't afford those expensive stocks. I rather get more money for my buck if I purchase Bank of America. But what's funny is, what's easier to double, a 44 billion or 262 billion? All right. Obviously, the lower the market cap, the easier it is to essentially increase. If you were to go here and take a look at 2020, look at that increase, 188%. Sorry, 181. If you look at Bank of America, I'm honestly curious. The increase here, about 51%. So you can see how it's very difficult for large companies like Bank of America to increase. And again, the stock price is lower, Al. It must be a lower company. No, you got to look at market cap. Because what is market cap? Market cap is equal to the number of outstanding shares multiplied here. Let's go ahead and look at it. Market cap is equal to, let's see, let's pull it up here. We're doing this in live here. Here. Market capitalization is equal to the current market price of the share. It's the stock price multiplied by the number of outstanding shares. I could have said this, but I'd rather show you because it's easier to read. So in the case of how do you find total number of shares, you could just take market cap divided by current market price and shares to get you the outstanding shares. If you don't understand that, then honestly, like you should not be invested in the market, right? You should learn these basic things, right? So what's going to end up happening now, this is going to turn into a $10 stock. But it's weird. It's like, well, it hasn't gone up to $10. They just conglomerated the amount of shares. Why are they doing that? So they can become compliant and give them time to become profitable. But don't let this be confused. If they continue burning cash and their book value starts decreasing, then of course we're going to start going down even more. But let's go ahead and estimate it. So we're going to do just kind of 1 year here. I'll do a kind of a very fast intrinsic here. And we take this here multiplied by 0.05. You get 115. And we're going to shoot them up 10 years. And we're going to go ahead and put a 25% growth rate. Look at that. This will be the intrinsic value of Clover, right? 25 to 35%. It depends. Let's go ahead and just do like the lowest of the lowest. Like let's just make it 25%. And they specifically stated they're going to dial down the growth and then later they're going to turn it back on. So we're going to first do like the worst case scenario. So this might look good for you. $162 stock. That's amazing, Al. But don't forget, if they do it, 1 to 10, you have to take that and divide by 10. That's actually a $16 stock, right? So again, this is what I was saying about kind of understanding. So what it's going to end up happening is if they do a reverse split, retail investors are going to forget about it, right? Jerome Powell is going to be able to tackle inflation. Okay. And this is what I think is going to play out, right? And I could be wrong, right? But it sounds such a typical way of retail investors getting punked, right? So what ends up happening is if you pull up their earnings report, they state here, the company reports strong liquidity, delaying any requirements for additional capital at least through 2023 and potentially beyond, right? So imagine this. And I'm not saying like this is going to happen. I'm just like speculating here, right? Because I have some experience with kind of how with retail investors, kind of been watching them over the years. What ends up happening is if they do a reverse stock split, the stock's going to go up to 10. It's going to hustle around 8 to 12 and go up around there. And then once they slowly become profitable, and once the inflation and all this turns down, and the Federal Reserve finally goes ahead and drops interest rates, and the economic forum goes ahead and starts projecting 10 to 12 months out, as normally the stock market does on that average, right? Then the stocks will start rising. And then all of a sudden, this stock is going to go from a $10 stock to like a $100 stock, $150 stock. But remember, it's a reverse split, right? So it's technically like a dollar stock going into a $10 stock, or a dollar stock going to a $16 stock. Now that's great and all, right? That's great and all, right? But I want to ask you something. What looks better? And that's the sad part about retail investors. Remember, 37% of the population is educated. And if you take that 37%, how much of them actually like math, right? Now imagine if all the other, the other side of the world, the other side that's not educated in the United States, right? How many of them do they like math? In fact, here, yeah. So we won't like just waste of time here, but essentially, what ends up happening is all those folks that don't understand math, they're going to be like, "Oh my God, this stock is going crazy! It's going to be all over the Wall Street bets and all these sad things," and they're going to push the stock higher. Okay, and then I think then the company then might start doing a dilution. Then they might dilute. The question of the matter is, when are they going to dilute? And when is going to be the intrinsic value of that dilution? And potentially, can you um, take advantage of that, knowing how to calculate intrinsic value? So when we get to that point, we'll definitely get there. But that's what I'm thinking about, right? Right. That's what I'm thinking about. I just want to give you kind of like what I'm thinking. Okay. But overall, there's a lot of negativity on the Reddit page. There's a lot of folks, and honestly, I don't care. It doesn't really, honestly, I laugh at it. The reason why I respond to it is so I can kind of give some perspective, because we do have amazing subscribers that want to get better. We have amazing members that want to learn about the art of investing. And honestly, this is the hard part, is when you see all your investments down, is the ability to look at it from an objective point of perspective, not a subjective, an objective, which is so hard to do, and look at the numbers and ask yourself, okay, the company, if I just look at the fundamentals, where is the company now in comparison to what it was a year ago when everyone wanted the stock? Okay. And then you have to ask yourself, why did everyone want the stock? Well, because they just wanted to make a quick buck. Okay. And I'm telling you, if you think the stock market is about making a quick buck, that's not the case. You know how hard is it to 10x your money? We did a simulation and we can 10x our money in like 15 years. It's hard to do that. It is so hard, let alone to do it in a year. So unfortunately, you saw what happened to the Dogecoin millionaire, right? You saw what happened. Was able to get to 3 million, and now he's back down to where he started. In fact, what is Dogecoin right now? And do we think Dogecoin could run? Who who knows? Honestly, who knows, right? So surprisingly, it has had some recovery, but nothing in comparison to what it went through here. Okay, during the Saturday Night Live show. Okay, but overall, guys, a lot of folks, they think they can just make this quick buck. And unfortunately, let's say if they did sell at the top, these folks, some of them, maybe, I hope they learned about investing and they didn't make this mistake that they think is not a mistake. Majority of time, they're going to take this money and gamble at it again. And then all of a sudden, they keep doing that and they end up losing it all. Okay. So in any case, this is unfortunately, I believe, the composition of a lot of these folks in here. I would say, I don't know the percentage, but I know there are some that are long and there are some that are just really just crazy short. And unfortunately, I've seen a lot of negative comments on here, and a lot of profiles that just literally got turned on. They just like started them. So I would say, just kind of focus on what matters. Focus on the company and not the stock. And that's what I'm doing. And obviously, this is not financial advice. This is not any sorts of advice. This is just telling you kind of what I do, right? And how I look at things, right? And you do whatever you please, right? And always ask yourself, why did I get into this company? You are the only person that understands why you got into this company. Was it because you wanted to make a quick buck? Right? The biggest thing is to always adjust your expectations, which is why I asked this person, what is your expectations? When did you essentially anticipate? When did you expect them to be profitable? Was there a mathematical sequence? And the answer is no. The answer is no. The guy did not even respond to any of this, right? Because he's just a speculator. Okay. So I hope this was a good video. It's a good long one, late at night. Wanted to give you guys my thinking on the reverse stock split. And that's it. I mean, and I hope that you had some time to look at this. There's a lot of cool stuff here. This ends in 2016, though, in terms of the data, right? But I wanted to give you guys this so we could, so you guys can see here all the bombings and just the financial markets, the Iraq attack of the U, all these things just happening. It's just insane, the stuff that's happened, right? And yet again, we still go up. We still go up. Americans find a way, or the world in general finds a way to be more productive, increase gross margins, use technology to solve problems, and all of these things, right? So in the end, what's going to end up happening is there's a lot of investors that are sitting on the sidelines now. And then once they go ahead, they think it's safe to invest, they're going to come in. And then sadly, we're going to go ahead, and I am going to go ahead and I'm going to sell this quote unquote safe investment to them once it reaches past its intrinsic value, right? If it does go there, I'm like, okay, well, here's your safe investment, right? And then unfortunately, we saw a hyper acute phase happen here. Normally, this happens in like 8 months to a year, 2 years, but we had this big drop, and unfortunately, these folks start selling, and then we again purchase it from these folks, and then most likely there's going to be new people that are like this in 2026, 2027, in which we will give them their safe investment. And sadly, that it is a cycle. It is a cycle. The question is, what do you want to do? Obviously, the answer is easy. The hard part is doing it. All right, guys. Hope this was helpful. I hope this was able to kind of slow things down a little bit. I come at you guys with a lot of data. This was just kind of just to answer those questions. This is what I think. I don't care about the reverse stock split. I think it is justified considering that all SPACs have been turned down. There is a just crazy recession that even the Feds messed up on about to happen. And I just think that's it. So anywho, have a wonderful night. Bye-bye.